Hello, everyone. This is Sarah Clark, Community Liaison for the FauxLaw Group. And here I have with me Lisa Stevens, and she is a bond manager for Leavitt Insurance Agency. How are you, Lisa?
I'm well, thank you.
So please tell us a little bit more about, for those who don't know, what is Leavitt Insurance Agency, please.
Leavitt Insurance Agency is part of the Leavitt Group, which has an affiliation with 115 offices, primarily across the West and the Southwest. But we also have offices as far east as Georgia and Alabama and Louisiana. And so the nice thing is we're a local agency with local owners, but we also have more of a national feel in that we have markets that we can reach nationwide.
So that is nice because then you can deal a little bit with the Nevada and Las Vegas area, but then you can also have all the resources for the national side.
Correct. Yes, we're almost licensed in all 50 states just with our agency alone, but we can always reach out to other agencies for licensing as necessary to work through them.
Oh, okay. That's nice. So tell us more for those contractors out there. What is exactly a surety bond and why do we need one?
Well, surety bonds are typically required on all public works because of the Miller Act and Little Miller Acts within state and local municipalities. What it does basically is you have a contract on a public work, and the performance bond guarantees that a contractor who bids this project would be able to complete and perform all of the scope of work and according to all the terms of the contract accordingly. And then also there's a separate part of that also called a payment bond. And the payment bond would guarantee that all subs and suppliers are made whole and protected because they don't have mechanics liens rights on a public work or a public project or a piece of public land. So they're really important to have on public works because they do create a lien-free project that's completed as per specifications of the contract language. Now in private works, we're starting to see bonds required more frequently because a lot of lenders are requesting it of general contractors that are working on those projects to make sure that the project they're funding comes to fruition. And also they would prefer to have no liens on a private project as well. So it's becoming more frequent in the private marketplace as well. And then sometimes we see bonding also on things like offsites, which would be the public works type projects that have sewer lines, sidewalks, curbs, gutters, streetlights, and sometimes utilities coming into a project that would eventually be maintained by the public entity, and the developer is putting them in, and they have to provide a bond called an offsite bond in order to guarantee that those are actually completed for that public entity.
So it's kind of a protection.
Absolutely. A surety bond is a three-party agreement, and the bond is between the principal, which would be typically your contractor, the owner or obligee that's requiring the bond, and the surety company. So the surety company is ultimately providing the guarantee to the owner obligee on behalf of the principal. And so it's very different from insurance in that it is for the benefit of the owner obligee per the contract terms. It's not a two-party contract like an insurance contract would be for insurance coverages, just between the insurance company and then the contractor itself.
Okay. And what brought you to this world, the surety world, Lisa?
Well, it's not something most people plan on doing. I actually started in surety about 18 years ago, and I came from another industry and got a job in an insurance office and started out typing notary bonds and helping process renewals on all their license and permit bonds, and eventually learned more and started working in contract, and over the years just gained as much knowledge as I could about surety bonding and underwriting process for it. And eventually I'm now working at the Leavitt office and as their bond manager and helping contractors get set up for surety lines of credit.
So you have a lot of experience then here, and all these experiences here in Nevada too.
Primarily, I've always worked in insurance in Nevada, but we actually handle some contractors in Colorado,
Mm-hmm.
and we also have some contractors in Georgia that we work with. So it's not something that is strictly confined to the Nevada borders.
Okay. And with all your experience, for those contractors out there that are thinking about doing bonds, surety bonds, what are two or three things you can tell them, or things that they should know?
That's a great question. I would say that a lot of people, if they've never had to do bonding, it might be a process that puts them off a little bit because it is very different from insurance. It's more like going out and acquiring a bank line of credit. So they have to qualify through a more intense underwriting process than they would on the insurance side. So it would require gathering up at least 3 years of financial statements if they've been in business 3 years or longer, which is important so that the bonding company can trend their stability and their profitability over that period of time. They would also need to provide business, in addition to the business financials, personal financials, which would indicate, the personal strength of the owners of the company. It is really, truly a credit arrangement. So it's similar to going out and applying for a mortgage or applying for a bank line of credit. They also, from the contracting side of it, they look at references. They like to see what size projects that contractor has completed successfully. They actually call the references and follow up on them. And
To be secure.
yes, and actually, it's great. And that's one of the best parts because they not only look at the financials, you have to qualify financially, but they also look at the contractor's capacity, their capability of completing jobs of that size and scope in that particular class of construction. So if somebody had, say, a license to do concrete and then wanted to become a plumber, the bonding company would ask, what is your experience with that? And if maybe they recently hired somebody who's a qualified individual and it makes perfect sense to expand into plumbing. But it's just really important for an underwriter to understand the business plan of the company and to help them be successful through their bonding. And I always say that it's important that you actually premeditate being bondable. A lot of times people don't see the need to get bonding until they actually need one. So it's always best, and I encourage people, if you think you might need a bond, let's go ahead and start the process and get you set up and pre-qualified. So it'd be very similar to pre-qualifying for a mortgage, and now you know how much of a home you can afford or you want to buy, and then go out into the marketplace and shop for it. So if you pre-qualify for your surety bonding, you'll know exactly what the surety company wants to support on your behalf, and that you can go out with confidence and bid that work in that field up to the levels that are very bondable. And sometimes bonding too, because it's a form of pre-qualification, it can separate you from other contractors who can't bond. It's kind of almost like a feather in your cap, so to speak, as being pre-qualified to work on this level of multi-million-dollar projects. And there's a third party looking at all your information and saying, we will back them on that.
Okay. So this seems like a really intense process to actually get a surety bond.
It can be. That's why we really try to help people through that process and explain it. I think when you understand why a surety would be asking you for financials, it makes more sense. When you don't understand the process and somebody's not explaining to you why somebody would ask for that, it's a little bit more difficult. Some contractors prefer not to provide CPA prepared financials, and just a point in case of something recently that we dealt with. Yes. We actually had someone who started out with smaller contracts and did a surety bond, which was more of a credit-based program. And we got them set up for that, and it was probably in the $250,000 to $300,000 range. And the next bond they asked for was in the $600,000 range, and they still didn't have CPA financials. But at that point, the surety company said, we would like to work with you on that, but because you don't have a third party verifying your financials, we think we can do this for you, but with a fund control requirement, which would be where all the funds are escrowed from the general contractor before they go to the sub, and sometimes they joint check out to suppliers. And that's a means to an end, but it slows down being paid, and most contractors really don't like funds control. And so they went through that process, and it was painful. They didn't like it necessarily, but it did get the job done, and they got their bond, and they finished the project very successfully. And then this year, they recently had a bigger project come along.
And they still didn't have the financial.
And I really encouraged them. I said, I really think we can do a much better job for you on your bonding if you wanted to get a CPA prepared financial statement on a reviewed basis. And so they contacted their CPA. They got the financial done. We saved them over $20,000 in the premium, a lot less headache, no funds control. It really makes a difference. If bonding is important to you, it will smooth the way to getting bonds done more easily, because the bonding company can rely upon the CPA statement and can extend more credit more freely. And so they're relying on some numbers that have been verified, and they can hang their hat on them, so to speak. So it just makes it so much easier in the long run. But until that you come to that point where it's really a necessity, a lot of people would prefer not to spend the money on a CPA statement. But when you look at the bottom line, though, at how much was capable of being saved, comparatively in the premium costs and the headaches along the way, I think they were really glad at the end of the day they went ahead and did the CPA statement. It really helped them move forward and create the kind of capacity they wanted for the next bond that comes along.
Definitely, it was quicker and cheaper for them as well.
All in all.
Yes. And how long can that process be of bonding? And what role do you play on it?
I play the role of an advisor, and also someone who helps you to gather all the information. We act as a broker on their behalf, and so we're the intermediary between the bonding company and the client. Bonding companies work through brokers. They don't deal direct with contractors directly or clients, and so they have to have somebody advocating on their behalf, and that's the role that we play. We educate and help them to understand the information that's being requested and why, to make it a little less painful. We help gather up the full submission, the questionnaire, the financials, and then address any questions that the surety company might have, and then help see the process along step by step. And throughout that process, assuring, the client that it's moving forward and addressing any questions or concerns either side may have about the underwriting. And it really depends on the quality of the information being provided. It can move along pretty quickly, and it can take longer if there's questions.
That will be really helpful to have someone like you to take them through the process. If I were doing it, I would definitely need help for that.
Well, thank you. I try to be helpful in the long run. It's something most people don't do on a regular basis. So it is kind of helpful to have someone in their corner helping them along in the entire step-by-step.
So if there is any contractor out there, someone that is looking for surety bonds, how can they contact you? How can they reach you?
Well, you can call me on the phone. My direct line at work is 702-947-4059. And
What was that again?
I'm sorry, 702-947-4059. And I'm always available to just answer questions. We spend a lot of time on the phone just explaining how bonds work and how to help someone get one, and the different programs that are out there that might make it more accessible to them. I'm also available by email, which would be lisa-stevens@leavitt.com, lisa-stevens@leavitt.com.
Well, thank you, Lisa, for your time, and thank you for explaining to us a little bit more about bonding and what can a company like yours do for a contractor. And, well, thank you for coming, and thank you, everybody, for listening. And you can always contact us through our website, FauxLaw.com, FauxLaw.com. Thank you. Bye.
Thank you, Sarah.